Hi, welcome to Trading Without Fear. In this episode, I want to discuss a trader tip of paper trading. What is it and why you should use it? So I've heard a lot of mixed opinions on paper trading. Some people really love it, some people really hate it. So let's go ahead and kind of discuss a little bit more about why I think it's great and why a lot of professionals do use paper trading. So let's go ahead and contrast a typical trader between the professional trader and how they actually utilize a paper account. So this way you can get the most out of yours. So the typical trader doesn't trade their paper account as if it's a live account, meaning oftentimes they don't use any risk management, profit potential or profit sell targets, and they don't even have a proper position size. They may be trading with an account size that's way too large compared to what they'll be using in real life. Another thing is the video game approach of where oftentimes a person, a typical trader will be trading with too much account size than what they would in the real world. And so what they are doing is they're buying stocks with, sometimes triple or quadruple or even more amount of the money than they actually have in their realistic account. And they're getting conditioned to actually take these bigger gains, even on smaller percentages than what they would if they had a normal account size. And because of that, the typical trader doesn't actually utilize paper trading as a testing platform. So some of the common mistakes that I see newer traders commit is not learning how to use the platform to its fullest potential. So a lot of the times when you're actually learning how to place a trade, maybe even the first couple of trades you did before you understood what a limit order was and a market order was, paper trading is a great way for you to actually learn this new system before you actually start to use real money and risk your own capital. So all trading errors are the result of thinking or believing that you know what's going to happen next in the market. Because paper account is funny and money, there is no emotional attachment to any of the outcomes of the trade. Some people will call this a disadvantage of paper trading. I actually see it as a positive. Since trading is a form of gambling, if you compare that to something like poker, with a 52 card deck, depends on the number of people at the table, you're looking at an outcome of 2.60% chance of getting a full house, a 3.05% chance of getting a flush, not including a royal flush or a straight flush, a 4.62% chance of getting a straight, not including a royal straight or a straight flush, and only a 4.83% chance of getting a three of a kind. Now, obviously the probabilities will vary, like I said, it depends on how many people are at the table, how many gamblers are actually playing, and when you look at that, those numbers are actually pretty small. The edge is definitely not in your favor when it comes down to poker. So you can obviously tell based off that example that the edge is not in your favor when it comes down to gambling. The remarkable thing is that professional gamblers are able to make consistent money from gambling. So paper trading is used to test your strategy to see what the odds of a winning system or a winning pattern is going to be in your favor. And not having any emotions in the trade allows the system to work. So if a trader is actually using the trading system, they're able to actually create profits on their paper account, but they're not able to duplicate in their live account. That's not a result of the system failing, that's a result of the trader not actually trading the system the way that they designed it to be, or the way it's actually going to be working out to be. So a lot of the times that actually has to do with the emotional state of mind of the trader, which is why papered accounts actually are a good tool to actually determine whether or not it's an emotional problem or if it's a system problem. And if you're not able to duplicate the same results that you have in your papered account and your live account, that's a result of trading scared. So let's go ahead and discuss what a professional trader will use a paper trading account for. So professional traders use the papered account to test and back test certain systems and strategies to determine what the probabilistic outcome of that edge or that trading system is. If there's any problems with this strategy or any problems with the development of that strategy they have, instead of actually wasting capital and mental kind of health, what they're doing is they're actually testing it on a risk-free platform. Professional trader understands that the paper trading has a lack of emotional connection. Professional traders understand that there's also random distribution between the wins and losses when it comes to stock trading. Now, paper money is funny money, and because of that, the professional traders are able to gain the trust in the system that they're developing on their paper accounts. So when they take it into the live accounts, they don't have to worry about the emotional state of mind because they already know the system works. Another thing that separates the professional traders from typical traders when it comes down to paper trading is they do actually treat their papered account as if it's a live account. They're using proper position size, they're using proper risk management, and more importantly, they're also taking a specific profit target. Now, because they're actually trading their paper account as if it's a real account, they don't develop any delusions about the strategy or the outcome the strategy could possibly be. So, for instance, if you have only $1,000 to trade with, why would you actually be trading with $100,000 or even $50,000 in your paper account? Now, the other thing is a professional trader will also use paper trading as a self-correction mechanism. So let's say if you're actually trading a system of where, you know, you're following your system for X amount of time, and then over time you start to notice that you're taking bigger losses. Some of your discipline is starting to become sloppy. So what some professional traders will actually do is they'll trade their papered account alongside with their live account, trading the same setups that they normally be trading. Oftentimes they'll cut back on their position and kind of over time compare the two together to determine how they actually slipped away from their system, how they slipped into old bad habits. And by comparing the two together, if their papered account has grown but their live account is actually slowly diminishing, it's actually an indication that they have actually slipped from their trading system, and they've either slipped into some bad habits they've had before, maybe such as maybe allowing a bigger risk, gap in between profits and losses. So if you were aiming for 3% max risk, now you're going down to 5 or 10% max risk. So that's kind of some of the self-corrections they also do. So this is very useful for boom and bust traders where they're trying to gain confidence into their trading system. They know that the system works, but what's happening is they have a series of trades where they're consistent and they're disciplined in maintaining their strategy. And then over time, those bad habits start to creep in. It could easily start from a single trade of where that commits an error and kind of snowballs into another error. So what a lot of professional traders will do if they're trying to gain confidence in a certain system is they'll actually trade that system with their live account and their so they'll compare it at the end of every week. Sometimes they compare it at the end of the month and kind of determine whether or not they're starting to slip back into old habits. Some of the common trading errors that a lot of newbies actually make is allowing losses to run and cut their actual profits too early. So if you're actually, have a certain risk management or a certain strategy within your system that says you're not going to be taking more than a 5% loss, and it actually comes down and you decide to actually take a 10% loss because you want to give it more time, and you're consistently doing that over and over and over again, that actually may be starting to trip you into bad habits in the papered account in reflection to your live account. It's how professional traders will use paper trading to identify those behavioral issues and correct them. So that's pretty much it for this episode. If you like this content, subscribe to the channel, ring the notification bell so that you get each and every new episode. I'd like to know from you guys, leave a comment below. Have you used paper trading? Did you find it useful? Have you found it useful to actually develop a new strategy that you use in the future, or that you're currently using now that you use from a paper account? That's pretty much it for now. We'll see you next time.